It is great to have one of my most popular guests back on the show, my friend Larry Lepard, investment manager extraordinaire. Thank you so much for taking the time to come back.
Oh, it's always fun, Natalie. Thanks a lot for having me on the show. I enjoy it.
Well, it was awesome to see you in Madeira, both in person, getting to spend some time together, but also the panel that you were on. I found that fascinating. So maybe we'll touch on some of those topics. But first of
Sure.
all, let's just get your thoughts on what's happening right now, because Bitcoin hitting all-time highs this week, all the crazy stuff on the macro side with the debt and inflation remaining sticky. So let's just get your perspective on what's happening
Yeah,
right
I
now.
mean, the big picture is the things that we've been warning about for some time now, many of us for years, really, but more recently, the last few years, are all starting to kind of come together. $1 trillion of debt added in 100 days, and record deficits, no spending restraint by Congress, the approval of the ETF, and the multiplier impact that's had on the price of Bitcoin. And as we know, it's kind of been a relentless uptrend, strong and up to the right since 50,000 when the ETF was approved. And there's another thing. Probably a lot of people didn't focus on it, but I did, and it's a big deal. There was a letter from the Industry Swaps and Dealers Association to the Federal Reserve saying, "Hey, you know what? We really think you ought to throw away this SLR, this limit that you place on the banks and their ability to buy Treasury debt." And of course, the reason for that is that there's a lot of Treasury debt to be sold, and the number of buyers are slowly but surely shrinking. And if you really read through the lines on that carefully, and it's a lot of inside baseball and monetary plumbing, it's more or less kind of QE infinity, or it'll give the banks the ability to just in an unlimited way, monetize the debt and put it on their balance sheet, because they don't have to count it as reserve, and so they can more or less print money to buy the government debt. So it hasn't been approved yet. It was a letter, but it's clearly those kinds of things. They start with a letter and then they come with a Federal Reserve proclamation that this is what we're going to do. And they did it in 2020. And they did it in 2020 because at that point in time they needed to do it, because the debt, they were having a hard time selling the debt then as well. So to me, it's a big deal. And I'm not sure the market's fully absorbed it. Although, you could also argue maybe the market has absorbed it, because the two sound money assets, gold and Bitcoin, are both at record highs, or very close to. Gold's backing off a bit today, but gold had been constrained within a range of kind of a $2,100 top, $2,050, $2,100 top, and it broke through that rather decisively in the last couple of weeks. So, I think the wider world is awakening to the issues that many of us in this area have been talking about for some time, and that is that we have a sovereign debt problem, and that the likelihood is that the solution of the government will be to monetize it, and that goes to the letter I just referred to. So that's kind of the climate we're in, and I kind of see the sky as the limit for both of these assets. I expect they'll be higher in a month, and I expect they'll be much higher in 6 months. So.
Well, I'm actually really glad that you brought up that ISDA letter, because I wanted to break that down for the audience. I don't think enough news outlets are paying attention to it. The other day I Googled what people were saying about it, and it was like barely reported on. It was talking about how it's just some sort of regulatory issue that's going to help stabilize the Treasury market. But it is a really big deal, because this is referring to the supplementary leverage ratio, and banks pretty much want US Treasuries to be excluded from that. As you mentioned, the last time that happened was in response to the pandemic. We were in the middle of a crisis, right? But now we don't really have an obvious crisis before us, but these US primary dealers are saying, hey, please exclude US Treasuries from the SLR. Can you kind of break that down, especially for people who are, not finance experts? What does that mean, and why is it so significant?
Yeah. So the problem that I think the government is going to have as they continue to run these deficits, and as they continue to go into, so let's keep it really simple. 101, the government spends more than it takes in tax revenue. We know that, and it's getting worse. How do they finance that? They finance that by issuing a bond. Okay, the bond gets an interest rate price gets set on that bond, which is a reflection of the supply and demand for those bonds. And if there is no demand, kind of by definition, that means the interest rate price has to get higher, and that higher interest rate price would then lead to more interest expense for the government, which it would kind of lead to what James Lavish has said so clearly is a debt spiral, or a debt death doom loop. And so the federal government and the Federal Reserve have a real incentive to try and keep interest rates under control. That's a key piece of of what they have to do, because if we went to, I mean, we're at, on the 10-year now, we're in the fours, but we were at 5, and we saw how that created a problem last fall.
Mhm.
And so if we went to 5, 6, 7, 8 on the 10-year and higher rates on the, or similar rates on the shorter durations, the government interest expense would blow out even further. And it's already blown out. It's over $1 trillion a year, up from much less than that 3 or 4 years ago. But and so it would accelerate the funding problem and the financial problem that the government has. And so as a result of all of that, the government and others are looking for ways to find more buyers of those bonds. And because to the degree that they can find a buyer that creates supply or creates demand, which would bring interest rates down, and that's what they want to have happen. They want to have interest rates come down so that their funding costs are lower. The banks can buy these bonds, and often they do, and then they quickly flip them to the Fed or flip them to somebody else, or they can leave them on their balance sheet, but they're somewhat constrained in terms of what they can leave on their balance sheet because of what you referred to, the SLR, the supplementary leverage ratio. And it's confusing even to experts like me. It's somewhat confusing how this whole mechanism works, because it's kind of tricky monetary plumbing that nobody really pays attention to. But boy, when this ISDA letter came out, those of us who were in the know, Fed Guy 12, Joseph Wang or Luke Roman, or those of us who are watching Lynn, or those who are watching the monetary plumbing very carefully, like, holy shit, if I'm reading this correctly, this means that these banks can buy as many of these bonds as they want, no problem, and they can create the money to do it. And so it's kind of, broadly speaking, it kind of looks like QE infinity.
Mhm.
Now, because of the way it's sort of backdoor and subtle, I mean, obviously the Fed right now, if they were to stop QT and announce QE, that would be seen as being massively inflationary. And that would not be a good thing for them. That would not help in their fight against inflation. But if they can get the banks to do their dirty work by changing the regulations that the banks are underneath, hey, that's great. They get to the same place. It's just not called QE. So I think that's kind of my synopsis of what's going on.
Well, and it just means that the banks are taking on even more leverage so that we could go
Yep.
further into debt.
Yep.
And I'm pretty sure that SLR was in place as a result of the financial crisis in
Oh,
08,
it was.
09,
It was
right?
definitely
It
there.
was
They
supposed
left
to
it
be
in
a
place for a
protective
time.
mechanism.
Yeah, and then they ultimately they unwound it. But yes, that's correct. It allows the banks to get more levered. It allows the banks. I mean, there's really a collaboration between the banks and the government to keep this whole scheme going.
Mhm.
And so, this allows the banks to benefit. And one thing we don't know is we don't know the differential pricing on some of the things. We don't know what. I mean, there's my gut is, and this gets really tricky. And Lynn's a better person to ask about this because she's just so much better at the plumbing and the monetary economics. But it's very possible that like the reverse repo and other tools they've used, they'll figure out some way to make this more profitable for the banks, because the banks don't do anything unless there's profit involved.
Right.
So, but and we haven't seen that yet, but we will. I mean, I think that the description of how they're going to do this, I'm guessing this will come out sometime in the next few months, and this letter was a shot over the bow.
Coin Stories is brought to you by Bitdeer, where the power of Bitcoin mining is at your fingertips. As a publicly traded leader, Bitdeer's global reach and scale means they're everywhere you need them to be, ensuring you're part of the thriving Bitcoin economy. Bitdeer's not just mining, they are industry pioneers, and Bitdeer stands alone as the only vertically integrated, technology-focused Bitcoin mining company. What does that mean? Well, they're not just deploying, but developing the latest tech to make Bitcoin mining more efficient and effective. With the industry's most experienced leadership team, innovation is in their DNA, and it shows, with a quarter of their workforce dedicated to research and development, pushing the boundaries of what's possible in Bitcoin mining. Now they're leveraging years of expertise in data center and cloud management into high-performance computing through a recently announced partnership with NVIDIA. Join Bitdeer in reshaping the world of Bitcoin mining. Learn more at bitdeer.com and explore how they are pioneering the future today. Yeah, and as you pointed out, and James Lavish talks about, I mean, the treasury auctions have been pretty, I mean,
No,
not maybe abysmal is a too dramatic
it
a term,
depends.
but
It depends on which
basically,
one. Yeah, some have been abysmal. Yeah,
yeah,
yeah.
US primary dealers basically have to buy a lot of these T-bills because there isn't enough demand. And meanwhile,
Right.
they just released this budget proposal, right, for 2025, $7.3 trillion.
Right.
Biden's administration wants to raise taxes by like $4 trillion. I mean, where are we at here? Can you talk about just how ridiculous
Well,
all of this is, and the fact
it's
that the only thing that will fix it is stopping government spending, but that will initiate, Great Depression 2.0.
well, that's right. I mean, and this is why we've often said it's kind of they're trapped, right? And we know that when they're trapped, that the default condition is always print more money, print or go burr. Yeah, I mean, Biden is talking about trying to tax the rich. The increase in the total budget size is enormous. I mean, I was reading something in the Wall Street Journal this morning talking about how the whole budget was really a fantasy because a lot of what he's projecting just isn't realistic. I mean, I find it amazing that the CBO is projecting not that great an outcome for the next 5 or 10 years, and they're saying there won't be any recessions in a 10-year window, and they think that inflation and interest rates are going to go back to 2 or 3%. And I'm like, what planet are these people living on? So, yeah, it's we live in a financial fantasy world, really, that these people have kind of constructed. But there are some free markets. Probably Bitcoin is the freest of all the markets in terms of lack of manipulation. And guess what? They get it. I mean, Bitcoiners get it, and people are getting it, and they're saying, okay, if you're going to debase my currency, I'm going to buy a currency that by definition cannot be debased above and beyond the programmatic formula. So, and this is why Bitcoin's at new all-time highs, and I expect it's going to go much higher. So.
You've long been a huge proponent of gold too. Are you shifting your stance a little bit, and are you
I am.
telling
I mean,
people to maybe?
look. I'm very, yeah. And some gold guys are getting mad at me. I'm not down on gold. And I never have been. Um, you know, I the I'm pivoting or not pivoting. I'm trending away towards gold just because. Let me make a couple things straight. I think gold is going to do incredibly well in the monetary debasement that's coming, but I think Bitcoin is going to do much better than that. And so, as an investment manager, my job is to earn the top risk-adjusted return for my clients, and I view Bitcoin as a better risk-adjusted return than gold. This far into the game, and now having a lot of the risks in my mind in Bitcoin gone away. I mean, perfect example. One of the biggest risks I think in Bitcoin until the ETFs, was TradFi looked at it, or most investment pools looked at it and said, how can we invest? And Saylor made this point: how can we invest in something that we think the government might shut down? And when the government approved the ETFs, I mean, they more or less gave the green light. Say, well, we're not going to shut it down, at least not now. There might come a time when they're in distress and they decide they want to shut it down. That's a whole different discussion, but that's a few years out. And so, I think with the endorsement of the ETFs and the recognition that those funds are now going to flow into it, this is no longer just a niche form of sound money. This is mainstream sound money, and it can really, in a meaningful way, compete with gold. And so, as a result of that, and I think it will beat gold over time. But that doesn't mean nominally, I don't think gold will ever go down. I mean, gold in fiat terms will continue to go up, just not as quickly as Bitcoin. And so one of the things that happens, I mean, there was a time probably 6 months ago where I was personally 50-50 gold and gold related things in my fund that are gold stocks and so forth, and Bitcoin. And that's probably now, I haven't done the math recently, but it's probably like 60-40 or 65-35, partly just because the Bitcoin went up. I mean,
Yeah.
I didn't buy any more Bitcoin. I didn't buy any more gold. Actually, I did buy some more Bitcoin, but not a lot. But when the price of Bitcoin goes up as a percentage of your asset holdings, it becomes a larger percentage. So, I've not completely abandoned gold, and I think gold is very appropriate for people who want a sound money alternative with lower volatility. And that some people need that, right? You can't, 70, 80, 90-year-olds or, whatever, older investors can't comfortably be putting huge pieces of their net worth into Bitcoin, knowing that there are times when it has 50 to 70% drawdowns. It's irresponsible. They can certainly put in 10, 20, 30, 40%. And so if you want a sound money, asset that can't be printed by the government, that has never really gone down more than 20% in a given year, gold represents a solid choice for some people.
Yeah, I mean, you bring up really good points. I was allocated to gold in my retirement portfolios, and it just really underperformed Bitcoin. And I
Oh,
wish I had placed, that money into Bitcoin instead. And,
yeah.
going back to that panel in Madeira that I mentioned up at the top of the show, you brought up your experience even with equities, like early on with
Oh, yeah.
Microsoft. You felt like you sold too early, and Michael
Oh,
Saylor's brought up the idea of, selling the winner to buy the loser. Can you talk a little bit about that in your experience? Because,
yeah,
I think it's
absolutely.
relevant to these conversations with
It
Bitcoin.
really is. It's a mistake. And Saylor asked me. It was kind of humbling that Saylor's asking me a question on stage. I was like, wow, this is interesting. It's a mistake that a lot of investors make, I think, and that is to say you've got a gain and you're feeling good about it, and you think, oh, this can't last, and maybe it's overpriced now, and therefore I'll sell it. I bought Microsoft in '86 when it went public, 14 times trailing, growing 40% a year, and I made, I don't know, 3 times my money on it, and I sold it for a logical reason, actually, because it was the only money I had to make a down payment on a condominium, and I wanted to own a condominium. So, but
Mhm.
had I held on to it, it turned out it went up another 4,000x, and I missed all
Wow.
that. You're right,
Wow. So you
and
bought
and,
at
and
what price and you sold at what price?
well, back then it was probably $15, but split adjusted,
Wow.
it was a 6 cent stock, and I think Microsoft today is trading at 200 and something. So,
Oh my
yeah, I
gosh.
mean, yeah, it's crazy. I mean, I left a ton of money on the table, but who could know? And by the way, most stocks aren't Microsoft. I mean, the
Right.
reason that worked, the killer stocks. If you really look at some of the greatest stock returns that have been made in the last 30 years of investing, they've generally been in the base layer of something that grows and spreads to become ubiquitous,
Hmm.
and they've got kind of a monopoly position and a network effect. So I put in that bucket. Microsoft was probably the first one. Google is another one. Facebook is another one. All the fangs, and then frankly, I think the most recent, and those. And by the way, you're a little too late on all those. You can still buy those companies. They are still monopolies. They will grow, and they're
Yeah.
fabulous companies. But the big gains have been made in all of those categories. This is buying Bitcoin right here is buying Microsoft in its first 5 or 10 years of existence, right?
Yeah.
I mean, this is the base layer of the new form of money, and ultimately everything will be denominated in sats. So, yeah. And Saylor asked me the question. He said, "Well, you sold it," and he made the point, and I think he's right. There are a lot of people who don't understand this asset. They're going to buy it, and it's going to work, and they're going to feel great, and they're going to think, "Hey, I made 3 or 4 times my money," and they're going to sell it, not
Yeah.
realizing that it's going to just keep, as he says, it's going up forever, Laura. I mean, this thing, unless we're wrong about this being adopted as the base layer of money, and I see no evidence to suggest that's the case, these coins will be, 100,000, then they'll be 400, then they'll be a million, then they'll be 4 million, then they'll be 10 million, and the time frame on all of that is probably 20 years because, Microsoft started in the early 80s, and here we are 40 years later,
Right.
that it's the multi-billion-dollar company that it is. So this doesn't happen overnight. But the point, as you raise, is you don't want to sell. It's like Manhattan real estate, as he said. You don't want to sell a cornerstone asset that can't be replicated, and can't be debased just because you have a profit in it. Right? I mean, that's the lesson.
A
And
great way to put it. Cornerstone asset. I love that. It's prime real estate in cyberspace, but it's like digital Manhattan.
That's exactly right. I mean, the other one I forgot to mention is Amazon. Same story. I mean,
Yeah.
these networks, and we all know Metcalfe's law, and the way a network's value increases geometrically as the users increase mathematically, and so arithmetically. So, I mean, they gain enormous value, and so this is why. And I don't think most investors really understand this. I mean, and I have to say I give myself pretty low marks for not really understanding the value of these. And Saylor did get it because he played in the .com thing, and I was involved in the .com thing. And
Mhm.
what I should have realized is that there are going to be network businesses built here that have enormous value,
Yeah.
and I should have started looking for them. And I was looking for them. I looked at, as an example, I looked at Amazon, and I thought, this is really interesting. It's not just books anymore. He's selling all kinds of stuff, but he wasn't making any money. And so
Right.
I took my TradFi lens, and I said, hang on a second. I'm a Warren Buffett guy. I want a low PE stock that's going to, and there was no profit. And little did I realize that what he was doing was, gaining share, and that eventually he would have the entire market, and then he could generate a profit. So,
Right.
and so I missed it. I completely missed it, you know?
It's fascinating to hear those stories. I had a friend I was talking to in Los Angeles about a month ago, and he said that, Amazon was represented by a talent agency in its early days, and they had
Oh,
the chance to buy it at under $10 a share. And everyone
oh
thought,
my.
no way, no one's going to go online to buy books. And they totally missed out. And the rare few who said, you know what, I'm going to take a chance on this. I'm going to put $1,000 on it, or I'm going to buy 1,000 shares, $7,000 at the time. Like they went on to make a ton of money,
Millions,
but it
millions and
really
millions
is.
and millions of
It's
dollars.
it's
Yeah,
crazy rare. I mean, most companies obviously do not perform well. You can even look at the S&P, right? Just a couple of companies have all the gains, and everything else is
correct.
underperforming. So if you can pick the right one, it's great. But to your point about the monopoly network, that is what Bitcoin is. It's the dominant monopoly technology network,
Right.
and it's accessible to everyone, largest addressable market of any asset in the entire world. And you don't have the risks that you have with a company, with leadership and product liability and all that.
Exactly.
So really,
Exactly.
really
I've always,
incredible.
that's one of the reasons I've pounded the table about it. I just, because I've been an investor for my whole career. And I mean, I never underestimate the ability of management teams to screw stuff up.
Yeah.
They do
Yeah.
it constantly. And here we are. I mean, look, I suppose all the core developers could screw it up, and I suppose they could get a majority of the nodes to accept that screwed up thing, but I think that's unlikely. And so it feels to me like it's a pretty bulletproof, operating model.
It's time for a quick break to hear these messages from my partners who make this podcast possible. First up, Bitcoin 2024, the world's largest Bitcoin conference, is coming to Nashville this July. Join us for 3 amazing days of keynotes, panels, networking events, workshops, concerts, and my 3rd annual Women of Bitcoin brunch. The Bitcoin conference is actually where I launched my podcast almost 3 years ago. You never know what can happen or who you can meet here. Head to b.tc/conference and use the code HODL, HODL, for 10% off. Next up, Coinkite. Coinkite makes everything you need to safely self-custody your Bitcoin, including the Coldcart Wallet, the cold storage device I use for safekeeping my Bitcoin. You can verify the source code, it's ultra secure, and it's easy to use even if you're a beginner. Head to their site in my show notes and get a 5% discount with promo code COINSTORIES. Next up, CrowdHealth. Health insurance costs are sky high, and it's money that feels wasted if you don't need a doctor. That's why CrowdHealth offers a community-based alternative by crowdfunding healthcare with other Bitcoiners. I get to avoid traditional insurance fees and support real people, not mega corporations. Visit joincrowdhealth.com/Natalie and join us. And finally, the why of Bitcoin is easy to grasp, but the how can be so confusing. The Bitcoin Way is your professional Bitcoin IT and security team that offers personalized one-on-one support to guide you through cold storage, setting up a node, inheritance planning, privacy best practices, and more. Don't take my word for it. Take 82-year-old customer Bill's.
Give the Bitcoin Way a try. You will be well on your way to owning and protecting the greatest money ever discovered.
Set up your free 30-minute consultation with the Bitcoin Way today. All right, back to the show. Okay, so everyone's feeling really bullish, including you.
Yeah.
I saw you put on your Twitter X, whatever you want to call it, that title page of Barron's, bet on the bull, right? This feels toppy in some ways. Can
Sure
you talk a
does.
little bit about that? Because, on the one hand, we know they're going to have to come in and print. But on the other, I mean, could we hit some sort of a cliff where it does send Bitcoin tumbling once again? I mean, and everything starts to crash, and then they have to reinitiate the printer. Because the last time we talked, I remember one of the most fascinating things that you said that a lot of people commented on is you said the US government basically has like one big last print in them before it all sort of collapses. So what's your take? Are we headed toward that final blow off
Yeah.
top?
Well, yeah. So I've given up trying to predict the stock market. I thought it's overvalued for some time, and I thought it's going to come down for some time. And arguably now we're in kind of a mini crack up boom. Although,
Yeah.
maybe we're putting in a top here. There was a big outside reversal on Friday in Nvidia, which is kind of the leading speculative stock. So we'll wait and see. But to your point, to your broader question of where are we in the market cycle? I mean, there's nothing about the stock market that's cheap today. But that doesn't mean it has to fall. If the money keeps flowing, it does represent a hedge against inflation. You're buying operating companies that in an inflating world will be able to reprice their services or their goods. The bond market is a totally different story. I think the bond market's in a lot of trouble and about to be in a lot more trouble. And that's why, the government is doing the things like this SLR thing we were talking about. We know for a fact that the way the system is constructed, and that is to say that the debt is growing faster than the GDP, which services the debt, that this cannot go on forever. Stein's law, it has to end. Particularly with interest rates going up, which makes the problem even more acute. I mean, part of the reason we got so far out over our skis is that we were in an environment where interest rates are falling, and that's not now the case. My guess is they may come back and drop interest rates, but my sense is there's a chance, Natalie, that something breaks, and yes, at some point we know that at the end of the day, the Fed has these two mandates of full employment and stable inflation. But we also know that the third unspoken mandate is functioning financial markets. And, we've had 5 or 6 instances, call it 10 instances over the last 20 years where the financial markets have threatened to not function and the Fed prints. And the most recent one was, March. Well, there are a lot of them. I mean, there was a mini one with Silicon Valley Bank in March of 2023, right? That was a break in the system and a failure, and it could have led to a bank run, $17 trillion of bank deposits, being in trouble. And yet they created a BTFP and they bailed it out. They were experiencing one last fall when the 10-year went to 5%, and they came out with all that jawboning and started saying, "Oh no, don't worry, we're taking rates down," because the system is so highly leveraged that it cannot handle higher interest rates, and yet higher interest rates are what's required to tamp down inflation, and so they've really got themselves in a pickle. So, it's hard, but it's very hard to know exactly how the cards are going to come down, how it's going to unfold. But, we can be sure that if, for example, the CRE market breaks, commercial real estate market breaks, that they will come in and they will print to excess. And in fact, there's been a lot of talk in some of the people I know in DC who say that, everyone down there has a big mouth, that the Fed and others have been kind of playing around with the notion of like a resolution trust kind of thing to bail out the CRE market, which, wouldn't surprise me. I mean,
Wow.
right. Because, you've got a lot of regional banks who have notes on buildings that we can all see, or, you see these $80 million, purchase price or cost to build buildings being sold for $20 million. Well, a lot of debt was used in that case. A bank holds that note. That note's, gone to money heaven. So, so there could be another problem coming. And, I think, the bond market could start to fall apart, and they could have to, institute YCC. I mean, look, the thing I will say in their defense is they're damn creative at printing money in lots of ways and not talking about it and saying it's not printing money. I mean, the BTFP was printing money. And it's, you give us your shitty loan for 70 cents and we'll give you back $1. I mean, that's printing money.
It's interesting that you say that, because before I had the opinion that all of these people are completely incompetent and have no idea what's going on. But after listening to people like you, reading, what Luke Gromen puts out, it's like Janet Yellen knows exactly what's going on. Actually, we're being put on by them. They know what is percolating under the surface. And they're just trying to hold it all together, which is, I don't know which one is worse. I don't know if it's worse. They're totally right.
Yeah, that they're evil and putting us on. Yeah, right. I mean, it's bad. I mean, it's a problem. But look, the thing that we can say with a relatively high level of certainty, but we don't know the path. But what we do know is the mathematics of the system. I mean, this was always Foss's point. This is just simple math, right? Yeah. And the debt is there. It's got to be serviced. There's not enough income to service it. They will have to print the money to service the debt. The printing of the money will dilute the monetary stock, which means the purchasing power of every monetary unit will be less. Full stop. Yeah. So, as an investor, you need to own assets which the government can't print. Right. So, Bitcoin is the best. Gold is up there. Real estate's up there. Good monopolistic stocks kind of count. Et cetera. So, there are ways to protect oneself, and I think people have to do it, right?
It is fascinating how long we can kick the can down the road. And as they've tightened the monetary policy, they've kept the fiscal side very loose. And so we're running these crazy deficits. I reported earlier in the week on my segment, The News Block, how the American dream now costs more than $3 million. It's become basically unaffordable for the average hardworking member of what used to be the middle class, and I know that's something that you touch on. It's one of the reasons why you're passionate about Bitcoin, because this country doesn't reflect the one that you grew up in, the one that
Not at
did
all.
represent a lot of hope and opportunity. So, do you have a message about that and how hopefully Bitcoin can make the American dream affordable again?
Absolutely. I mean, look, what you're describing that's that's kind of why I'm in this fight, right? That sound money would restore, sound values in the country, and the country is way, way, way off the rails. Anyone looking at it, anyone living in it can understand that and see it. And although there are a lot of good things about the country, there are a lot of ways we've gone in the wrong direction. Yeah, when we get to the stage where we've got uh, a Bitcoin standard or a sound money standard, things are going to be incredibly good, much, much, much better. But we need to get there, and we need to, there's a chasm that we have to cross, and we're not even, out over the middle of it yet. We're just getting started on that crossing process.
Yeah.
But once we do cross it, it will make the world a much better place. So, I'm quite bullish about the way the world is going to look, and for your generation, my kids' generation.
Yeah.
But yeah, what you've described, they're all suffering. They're all in their 20s. They're like, hey, Dad, there's no way I'm ever going to be able to buy a house. And I get it. And they're all doing fine. And I get
Yeah.
it. I mean, it's, the system is really, really broken. And, that's why it's, as we all say, right, fix the money, fix the world. I mean, and you've got all these political people pointing fingers at each other, not really, many of them not really realizing what the core issue is. And the core issue is the unsound money, right?
Yep. Well, I'm in that boat too. I know what that feels like. It's like my dream is to have a home, and I just want a place where I never have to move again. I want that idea of
Yeah,
like, the,
you'll get it.
the
You'll
home
get
that
it.
your kids grow up in and all that. So, but I hope I don't have to sell my Bitcoin. Maybe I can figure out a way around that. But
No, I don't think you'll have to.
as we start to wrap up, I wanted to get your thoughts or predictions surrounding the election, because I think we're in a really interesting time. And luckily, Bitcoin is apolitical, though not many people realize that yet. But we're seeing people like former President Donald Trump coming out saying he won't take away Bitcoin. He's sort of becoming a little bit more positive about it. On the Biden side, not so much, but at the same time, they're releasing these projections. They want tax revenue. I mean, something like Bitcoin would be great for tax revenues and capital gains
Sure.
tax, right? So what are your thoughts on the political side of all of this? Because so many people
Yeah.
turn to politics and they put blame on, left versus right when the issue is really the money.
Yeah. So I try and avoid the politics a lot, and I'm not a fan of either side, blue or red. I lean libertarian, and therefore
Mhm.
I probably lean, towards RFK Jr. But it's interesting to me, like the Trump. I mean, Vivek must have gotten to Trump a little bit, right? Because he no longer hates Bitcoin. It's not a scam or a fraud anymore. And the other thing I think is going on is it's becoming a big enough of a voting block that
Yeah.
who wants to piss us all off, right? I mean, and I mean, politicians are nothing if not self-interested and worried about votes. And now that you've got an ETF, you've got a lot more people in the country who own some. And so, if you're a politician, you start saying, "Hey, this Bitcoin thing's bad, et cetera, et cetera." Well, shoot, maybe I'm not going to vote for you. So I think that's all it is with Trump, in my opinion. I don't think he understands what it is. I think it's just pure calculated self-interest on his part. Biden did something recently that I'm pretty sure it's Warren, not Biden, but it just annoys the shit out of me. This whole notion that they're going to try and tax the miners 30% on their energy consumption. I mean, that would just kill the
Right,
mining.
right.
I don't think it'll ever get through, and it would just kill the Bitcoin mining industry in the
It's
United
going to
States.
send it. It's going to send
It
it
would all go
elsewhere. Yeah.
overseas instantly. Yeah,
Yeah.
I mean, tons of jobs and economic activity and et cetera would all be lost. I think it's a non-starter. I don't think there's any way they'll get that through.
Yeah.
But look, it strikes me that over time, the politics are going to reflect the on the ground conditions, and the on the ground conditions are going to be Bitcoiners are doing well, and Bitcoiners are a big voting block, and Bitcoiners are going to be wealthy when these coins are worth $1 million a coin. And I could easily see, I mean, I have this sense that Saylor kind of sees himself as a really unique individual with a higher purpose. I think he's going to be a huge historical figure, and it wouldn't surprise me at all to see him run for president in 8 years or 12 years. And I also think he's
Wow.
probably going to be I also think he's probably going to be the richest man in the world. And knowing what I know about him, I actually think that would be an incredibly good thing for the United States, because I think he's a very strategic thinker. And I actually think he's a kind and generous human being
Agree.
who would actually do a pretty good job as a
Yeah.
president of this country, and maybe restructuring, kind of the broken politics that we have. I mean, we clearly need a massive political restructuring. We need term
Yeah.
limits. We need money out of
Yeah.
politics. We need rank order voting. There are a ton of solutions. I mean, it's the founding fathers had a great idea, and the politicians have managed to kind of stray quite away from that idea. We need to get back to the basics. So.
I mean, you bring up such great points. It's crazy to see what has happened in terms of people just pulling apart into two teams
Oh
who
yeah,
once were friends and neighbors, and I
absolutely.
think we are so much better than what we give ourselves credit for, I think. And I hope that fixing the money will help fix some of this, maybe not overnight, but over the long run, because this is a massive transition that we are a part of. Speaking of Michael Saylor, he said recently on CNBC in this awesome interview that I hope everyone checks out, that Bitcoin is property. It's not a currency. It doesn't threaten the US dollar. One thing that I'm curious your thoughts on, today in America, property is taxed. You live in it and it's taxed every single year. Some states have higher, other states have lower. Do you think that's going to happen with Bitcoin? Every year you'll have to pay essentially kind of like unrealized gains.
Yeah, that's a great question. Well, property is taxed, but it's generally when it's physical property and it's real estate taxes and it's the local authorities that want,
Mhm.
that provide services for the property that justify the taxation. They haven't gotten to the point where they tax, investment property until such time as it's a realized gain, and that would be a big bridge to cross. But it wouldn't surprise me. I mean, they'll be looking. I remember there was some talk. I mean, Bernie Sanders and others were talking about trying to tax, billionaires just on unrealized gains or on their net wealth. And look, a political system which is failing, which needs money, is going to, they're going to flail around and try and get money wherever they can. And so I think it's certainly one of the risks with Bitcoin. I will say one thing. I respect Michael a lot, and I think he's right that it is property. But it actually could, over time, it could become more than that. I'm not sure if he believes this or not, but I actually believe it will ultimately become the base layer of money, because it will be a form of money that's the characteristics of which are so superior to the alternative, which is the dollar. The dollar will fade into existence, and we'll have Sats will be the new basis of the monetary system. But admittedly, that could be many, many years out, and I might be getting ahead of myself.
It's funny. I on the flight back from Portugal, I read this book by Thomas Sowell, Trickle Down Theory and Tax
Oh
Cuts for
yeah,
the Rich, Why They Don't Work. I don't know if you've read this. It's
I've read
fantastic.
it.
It's
Yeah,
13
he's
pages,
he's
by the way.
great.
It's like a pamphlet. I mean, it's so true. And people have, I think, good intentions, but just the wrong understanding of economics when they ask for things like tax the rich, not realizing that, well, they're not going to be taxed more. They will find shelters and havens for
Right,
the taxes. It's not going to redistribute the wealth. What you need is to provide more incentives for productivity, which actually is lowering the tax rates. And
right.
tax revenues have increased whenever tax rates have gone down, which I think is fascinating. All right. Well, we're running out of time. Any final thoughts? Anything you wanna share
No,
before?
I would just suggest to people that are looking at this and listening to this, that they take the time to really study Bitcoin and understand it at a deep level, because one of the things, I mean, we all try and orange pill people, and I think we forget when we're orange pilling them to help them to understand how volatile it can be.
Mhm.
As a perfect example is, if you were orange pilling people a couple of years ago, and this, when it was in the 50s and 60s, and then it dropped to 15. I mean, I had some friends who, when it dropped to 15, they thought they, made a mistake and they sold it, and that was the wrong thing to do. And I think, people need to look at the history of the asset, understand that, it's higher highs, higher lows, but there are big drawdowns, and so you don't want to use a lot of leverage with this asset because of these drawdowns, and you want to in general aim to more dollar cost average as opposed to plop buy, and so that you don't find yourself in a situation where you need to sell your Bitcoin when the price of Bitcoin is on a drawdown. Because I think everybody who's been in Bitcoin for more than 4 years, generally speaking, you gain purchasing power.
Yeah.
But sometimes, in that cycle, you would lose purchasing power if you bought it and a year later it had fallen. So I would just caution everybody to understand the nature of the asset, and to think to understand it deeply enough such that if there is a drawdown, you won't be tempted to sell, because in fact, what you should be doing is buying that drawdown, not selling it.
Exactly. Such great points. The big takeaway, I think, from this interview is do not sell your Bitcoin. Even when it
That's
gets
right.
to 100K, don't
Well,
sell, because you won't be able to get as much back when it goes to
you'll never
500K.
recover what you sold. And in turn, if we go to 200 and it dips back
Yeah.
to 100 and you paid 200 for your last bunch, don't panic. Just sit there
Won't that be
knowing that.
crazy? I
Yeah.
mean, this thing draws down several thousand in just a couple of minutes. Can you imagine a swing from
Oh,
like 500K down to 200? It's
it
like,
could, and I mean, look, if you look at it historically, I think the volatility is becoming less over time. There's some evidence of
Mhm.
that. But having said that, I think everybody needs to be prepared to deal with the volatility, and
Mhm.
everybody needs to think long term. And because long term, I'm quite confident that this is going to be a multi-million-dollar per coin asset. And so, if you're buying it at 72 today, you're feeling. I mean, it feels like you're paying too much, but
Mhm.
I one of the great stories from Madeira. Somebody told me they knew Max pretty well. I guess when Max was buying his first coins, he paid. This is Max Kaiser. He was paying 50 cents, and he felt like he'd overpaid because Trace Meyer, who's a true OG, was buying his at 30 cents. So, I mean,
Yep.
pretty much everybody who's in Bitcoin feels like they're too late and they're
Yeah.
overpaying until
I know.
about 5 or 10 years go by, and then you're thinking, and people are going to be saying, "What do you mean? Hang on, you have one whole coin? What are you talking
Right.
about? That's
Or
impossible."
you bought Bitcoin under 100K. Wow. Yeah.
Right. Yeah, exactly. I mean, I bought my first ones at $300. Not enough, obviously.
Amazing.
That's the feeling everybody in the space has too. I wish I'd bought more. Well, we all do. That's just the
Yeah.
nature of it. But buy what you can, because it's a superior savings technology. And then, sit back and go live your life and do things you enjoy, knowing that your money is not being debased, which is it's a very comforting feeling, right?
I love it. I love it, Larry. Thank you so much. And one
Oh, thank
Bitcoin
you.
equals one Bitcoin, no matter what the fiat
No
currencies
matter what.
do. Thank you so, so much for your
Thank you.
time.
Always enjoy
Always a
talking to you,
pleasure.
Natalie.
I will link your work and your company in the show
Great.
notes, and I hope to see you again soon.
Okay. Thanks, Natalie. Take care. Have a good day.
Thank you so much for checking out this episode of Coin Stories. If you want to connect more, make sure to check out this podcast on the Fountain app. It brings creators like me closer to the global community of listeners, and it's all powered by Bitcoin. You can share the best moments of this podcast and stream stats directly to your favorite podcast hosts. And you get paid when other listeners like your clips, comments, or playlists, or just for being a regular listener. Get rewarded for helping build this incredible community. Download the Fountain app today and subscribe to Coin Stories. This show is for entertainment and educational purposes only. Nothing should constitute as official investment advice, and you should always do your own research. My inbox is open if you want to share feedback or guest suggestions. Just reach out at Natalie@talkingbitcoin.com. I'll see you next time.